Welcome back, everybody. This session is going to be on core trading. Core trading is a style of trading that takes advantage of longer term holds, holding for weeks to months, as long as the weekly trend stays in effect. I'm going to be guiding you through this little journey on core trading. My name is Michael DeGioia. I'm a native New Yorker. Not going to go into too many details about me. If you'd like to find out more about me, you can certainly join the first session, the overview, where I talk a little bit about my background. But needless to say, I've been an industry professional for years, and certainly would love to share some of that trading experience with you now. And what I'm going to do is I'm going to talk to you a little bit about this style of trading that I've been utilizing for many, many years. And I'm going to talk about when it's used best. And I'm going to share with you my screen right now. This is my Dash Trader software. In all of these styles of trading, having great trading technology like that of Dash Trader is a huge advantage in trading. You need to have good, fast, reliable data. And we're just going to start our little journey right here on the weekly chart. So let's just bring my weekly chart on. So core trading is a style of trading that is all about the weekly. And I'm going to bring this up, make this screen very, very big. And I'm also going to put on a couple of different indicators as we switch around, just to give you a quick guided tour into Dash Trader. So here is GBTC, right, which mirrors Bitcoin. Just going to drag and drop that here for a second. So this is the weekly chart of Bitcoin. Okay, this was and I'm just going to use some of the tools that we have in here, these technical tools. I'm going to make this very, very big so that we can see just the weekly chart. So core trading is about taking advantage of the weekly trend. And in this chart that we have here, I'm going to use my trend line tools. The first one I'm going to use is the horizontal line. So Bitcoin, or in this case, GBTC, had a very big horizontal level of resistance here at $14.86. And I'm just going to double click on this and show you how we can really increase the size of width. I'm going to make it a pretty solid 5. And I'm going to make it green. And you'd say, why am I making resistance green? Because this is also the breakout point for GBTC. Okay. When GBTC, and I'm going to also bring in another one of my technical tools here on Dash Trader, my trend line. And this one happens to have a ray, right? So this one, if you notice, the lows on GBTC were ascending. So we have a situation of ascending lows, low, higher low, higher low, higher low, right? So we have ascending lows. The lows are getting higher. And we have a very clearly defined breakout point. And I made it green because that is technically the trigger to buy. Now, could you have anticipated, could the core trader have anticipated this core trading breakout pattern? Certainly could have. There's a nice clean buy setup. There's a down bar, down bar, down bar into the moving averages right here. And I'm just going to put on here, right click. I'm going to actually find myself a nice technical item to indicate the buy. Right here, the rectangle. Right here we go, right there. And I'm going to color code this so you can see that I'm going to make this a buy box. I'm going to make the interior color a very, very light shade of green because it was a buy area. And then we hit OK. So here we have our little, I'm going to make it even a little bit lighter so we can see everything really nice and clear. I'm going to make it a neutral color like blue. It seems to look that way. There you go. So here you can see that this would have been one of our first buy areas. This specific box, right? This specific buy is right here. This is the buy right there. So on this weekly bar, that this green bar broke above that weekly bar's high, that, and it's breaking away, breaking out of the area of the moving averages. That is the area that you could have anticipated the buy on the weekly breakout of GBTC. Okay. The next area, which would be the technical breakout. Now, let's just run through this as a core trader. Let's say I took a starting position here. Okay. And then I'm going to also add on the breakout. When it doesn't break down and reject, I'm going to add on this breakout bar. So I'm going to put another rectangle in here. Right there. So I can add on that breakdown bar, right? And then what the breakout bar that rejects and then doesn't go back to the moving averages and continues higher. And then this is the buy the dip trade, right? So this is what we've been seeing in this market for a very long time. This is GBTC, which certainly broke out, and buy the dip worked out really, really well on Bitcoin until it didn't. So this was the first dip. Certainly you could have bought any one of these dips, added to these positions on the dip, or if you didn't get into the first buy, right? If you didn't get into the first buy, you could certainly get into one of the latter buys. Okay, so here is another ladder buy the pullback area. Another one right there. And certainly it worked all the way up to this point. Each time it pulls back to this is the rising 10 period simple moving average on the weekly. And if it didn't really get deep until the 20, till right here, and then that's certainly, we got the death cross, which we've heard so much about in the media. Okay. But certainly you can keep buying the pullback. Now there is a point where you want to take caution and not buy the pullback anymore. And I'm going to show you exactly where that is. So we've got buy the pullback. This is the anticipated buy. This is the breakout buy. These are early great entries if you didn't get in here. Great buy the pullback entry, comes back, touches the 10 period moving average on the weekly chart. Great entry on the 10 period moving average on the weekly chart. In the buy zone, the difference between the 10 period moving average and the 20 period moving average on the weekly chart. But this is the key moment, the moment where you have to say, maybe the trend is no longer my friend anymore. And I'm going to do it right here. I'm not going to use a ray line. I'm going to use a traditional trend line right here where we have the high, failed to make a new high. And now if you didn't see that one, failed to make a new high again, right? So this was the first time that we made a high. We pulled back. We went into the buy zone between the 10 and the 20 period moving average. We pulled back. We actually went below the 20 period moving average, right, on this pullback. But on this one, we never made a new high. So if the market fails to make a higher high, it will make a lower low. Boom, there's your lower low. Market fails to make a higher high, it will make a lower low. Market fails to make a higher high, it will make a lower low. The uptrend is officially dead. Okay, the uptrend line has been broken and it's officially dead. Okay, this is not a great trend line because it has price interference. I'm going to try to find a low that does not have price interference. I'll put it from here maybe. So here is a great trend line example. That was where the trend line came back to the trend line. There is a slightly more updated trend line on these lows. Now, this is core trading in its fullest form. A breakout of a sideways range, continuation up, up, up and away, does not really violate the 10 period moving average much, okay? But you need to be out, when it starts violating that 10-period moving average on the weekly often. And you certainly need to be out if it puts in a lower high. It did one lower high here. It did make a higher high, but not higher than that most high. Okay, so definitely a lot of problems on the horizon for this, that you're trying to capture this whole move. Now, look, if you do get a big gap down, you get out as soon as it recovers a decent amount of that gap down. Meaning that if it breaks down, it usually moves back to the point from which it broke down. It doesn't need to move totally back, but that's why everybody got out here. So if you were holding GBTC at 52.50 and then next day you woke up and it's 38.75, when it gets up to 45, you're like, give me the money, get me out out of this position. Now I want to show you the SPY, but before I show you the SPY, I want to just show you the daily chart on the GBTC. Look at my points here, right? This is if you need more information. So the weekly trend on GBTC is the trend that you're trading off of. Okay. On GBTC, this is the trend that you're trading off of. Now you can see that on the daily chart, yes, we have a lot of volatility, but none of the gap downs last very long. They get immediately bought up. This is about the longest gap down. And it comes right to the trend line, comes right to the deep moving average, which is the 50-period moving average on the daily. Okay. But there's a lot of choppiness up here, low volume. Okay. And there's a lot of signs that there's trouble on the horizon. Okay. So anywhere that you get out, the core trade was from this green line. And I'm going to draw another horizontal line that I'm going to say that it's somewhere in this area. I'm going to put it right smack in the middle of this congestion area. From the high to the low, right smack in the middle is a very, very good, valid place to get out. Anywhere in that mix is a valid place to get out. So your core trade was to take advantage of this core trend, and it is based on the weekly chart. It is not the top. It is not the bottom. But you were trying to take advantage of this core move. And I'm just going to put in one more. And guys, I really just have to point out the power of the Dash Trader software in just illustrating and using all these various different technical indicators to illustrate this core trade pattern on the chart. So this is your profit. Now remember, in core trading, you're going for the big move, right? You're going for a big move, right? If you're going for a big move, there you go. That's the big move. That is actually, I should make this green because that's your profit. So let me just make this green. The interior color should be green. And let's just put some actual numbers on here. So in this instance, you got a move from $14.86 all the way up to $48.57. That is the core move on this core trading opportunity, which was GBTC. Now I'm just going to change this because I'm going to look at one that's still kind of in play. This is a core trading opportunity on the S&P. Now I'm going to go back a little bit further. Okay, so this is the SPY. Okay, this is the S&P on the weekly. So you could say that where did price get above its moving averages? This is a low. This was the pandemic low. This was the first move up after the pandemic. But at this point, we broke out. We failed to break down. There was nothing taking this market down. It got above all of its moving averages. And now it was firmly in a core trade. Price is above the moving average. Price is above the 10, the 20, and it rejected the breakdown. So let's put on our tools here to analyze this rejection of the breakdown. So horizontal line. So I'm going to put it right here as the breakout point was here. Okay, that's my breakout point. My buys, first best buy is right here in this case, because we really don't have any clearly defined right? That's my first best buy. Make it a little bit lighter. So my first best buy would be somewhere around here. Now, this is another issue, right? So this horizontal area, the prior high from before the pandemic, is my secondary breakout line. Okay, and you can see it did definitely hit resistance here. So my second buys to catch the core trade breakout after the pandemic, okay, would be right here. Right here. And of course, the last thing I have to say is that we're still technically in an uptrend. So we are in this trade. There are some signs that you might want to get out, but you have not gotten a violation of the trend line or the moving averages as of yet. So let me do a ray line. And the difference between a ray line and a traditional trend line is a ray line extends forward like a ray of sun going into the future. So there is your ray line. We're still in full effect. The trend has not been broken. We have made a high. We've made a new high. So we're still in an uptrend. So we're still in this core trade. Now, could you have taken a speculative entry on the rejection on the breakdown? That would be a position trading tactic based on the fundamentals. But certainly there was a position trading opportunity, right, where you have some fundamental data. That stimulus was put in place. So there was a great techno fundamental entry right down here, somewhere in the down here of the pandemic. Pandemic is scaring everybody to death. Stimulus comes into effect, quantitative easing infinity. And sure enough, that is your position trading entry. And I'm just going to show you how to do one more thing here before we move on. So I'm going to put in a text note here. I'm going to make my text note a little bit bigger. We'll go to 16 and I'm going to make it bold. And I'm going to say, okay, position trading entry, techno fund, right? Because you need the techno fundamentals. Okay. So that's my position trading entry, techno fundamentals. This is my, I'm just going to put the entire area as my core trading breakout area. All right, so there's my core trading breakout area. And of course, we're still in the trade because it continues to trend upward. And again, I make all these examples for educational purposes only. And I hope you understand that core trading is trading on the weekly chart using your moving averages, your 10 and your 20 period moving average. You're using support and resistance. You're trying to capture long-term trends in the market. You are not over managing your position. If you do drill down to your daily, right, you're drilling down to your daily just for the purposes of seeing what's going on in the individual chart. But anywhere buying in this area, your stops would be below these lows. So if you were going to put a stop on anything, you'd put if you got in here, you'd put your stop down here, right? If you got in here, you'd put your stop down here underneath those prior areas of support and resistance. If you got in anywhere over here, you'd have to put your stop below the lowest low of that range. I am going to switch back to my presentation and just wrap this up. I hope you found this educational session helpful. This session was about core trading, was for educational purposes. If you'd like to continue to learn with me, my name is Michael DeGioia. I work here with Dash Trader. You could go to learndaytrading.com, scroll down to the featured educators section. I can teach you all about the nuances of core trading, as well as all about trading in general, work with you on an individual basis. Two great ways to work with me is to do an introductory session. You want to get a feel for me, see how we could work together. It's $50. You get a 30-minute consultation. Otherwise, you can sign up hourly. More hours you buy, the better deal you get. I look forward to working with you. I wish everybody to trade well. Be careful out there. Trade well. Goodbye.